Hello friends, thanks for tuning in. Hope you're doing well. Wanted to do a little bit on self-employed mortgages. People have been asking me about self-employed mortgages. It's probably one of my favorite niche markets to work in, and I'll tell you why. The reason is that the challenge that a lot of self-employed people isn't that they're not making money. So these are strong borrowers that have the ability to service the debt, which lenders and investors are always happy to know about. The issue has more to do with the way that people file their tax returns, obviously self-employed people. So what do I mean by that? Well, being self-employed, one of the benefits is that you're allowed to write off legitimate expenses. So what's a legitimate expense? This is a gray area. As my friend Jerry Hogenhout, CPA, often says, there's three colors that the Tax Act is written in. This is a gray area. So the bottom line is that as a lender or an investor, it's not my job to determine if somebody is submitting their taxes in a way that is compliant or in a gray area. What my responsibility is to my lenders and to my investors is that I bring them borrowers who are capable of servicing the debt. So if somebody has revenues of $250,000 a year, for example, let's say a real estate agent, and they are pretty aggressive, let's say, in the way they deal with their expenses, and they report a net income of $65,000 after expenses, or if they have a personal real estate corp, maybe they'll keep money in the corp and pay themselves a smaller amount. In any event, when they go to the bank looks at the bottom line. Why? Because the banks are under the influence of CRA, and that's just the way it is, people, in our country. So they have an obligation to ensure, if you will, that people are filing their taxes 100% in a compliant area, no gray area whatsoever. And as a result, self-employed people don't get the money that they want to from the bank. They just get a smaller amount based on their $65,000 instead of $250,000. Now, you can't buy a house for $1.5 million or even $500,000 if you are very aggressively dealing with your expenses. We will need to see this income hitting the bank statements or commission statements, as I noted in the case of the real estate agent. We will need to see that. There was a time when you could get a mortgage with no proof of income whatsoever. Okay, with an institution. Now, these institutions, they do charge a bit more than the banks. I'll tell you that up front. Okay, on average, you're looking at about a point higher. So you know what? If you borrow, let's say $500,000 or $1 million, and you're paying a 1 point higher, that's $5,000 or $10,000 a year in interest payments versus how much are you saving on your taxes by doing what you're doing? Again, we're not the tax man, so I'm not going to judge you. My responsibility is to my lenders to ensure that you can service the debt, that you're a good borrower. So we're also going to look at income. We're also going to look at credit. If you're credit challenged, well, we have solutions for credit challenged people as well. But that's a topic for another day. Today was the self-employed mortgage. Remember, no tax returns, no NOAs. NOAs, notice of assessments. So we don't need proof that you filed either. I'll let you draw your own conclusions as to what that implies for some borrowers. My phone number, 416-876-2031. See you on the other side.